Hello everyone, Dividend Enjoyer here, and today I'm going to be doing a discounted cash flow model valuation for Energy Transfer, ticker symbol ET. And the reason I'm doing this is because I already made a stock analysis video on Energy Transfer, and I don't think there are enough videos on YouTube trying to value or looking at Energy Transfer stock fairly. And I kind of wanted to fill this demand and also help people make a more informed decision on the stock. Now, right here, we have our weighted average cost of capital that I will be using for Energy Transfer. But before I break down this number and go further, I'm just going to ask that you guys please subscribe to the channel if you enjoy the video. Please like the video as well, because that really helps. And check out some of the other stock analysis videos. But let's get back into it. So here we have a weighted average cost of capital of 7.11%. We also have the debt ratio for Energy Transfer of 44.18%, which is pretty typical, and a market cap 55.82%, which is our equity weighting. And I used CAPM for the equity rating with a risk-free rate of 4.579%, a beta of 1.64, and an average market return of 7%. This brings our cost of equity to 8.549%. And all of these numbers are going to be in thousands. I got it from Yahoo Finance. I pulled all the numbers and calculated everything out. Here I had the interest expense, total debt, cost of debt, which is, this divided by this. So the cost of debt's 5.644%. I also had their effective tax rate of 6.33%. And then the cost of debt after tax being 5.287%. So then these two weights are multiplied by each other, and this number in between, 7.11, is the weighted average cost of capital. Here's my DCF model based off of that 7.11% weighted average cost of capital, a perpetual growth rate of 2.5%, and each cash flow, with the 2024 cash flow being the trailing 12-month amount. I also plugged in a 4% growth rate, and I think that's on the very liberal, optimistic side. And with that growth rate, so if they're able to grow the cash flow on average 4%, then you're looking at an upside of 64.15%. Now, even if they don't grow the cash flow at all and the growth rate is zero, then there's still a 1.9% upside to the stock. So the stock is still undervalued according to my model and my discount rate that I'm using. Now, if we use a 2%, because I think that's very fair in energy and utilities, there's a 30.78% upside to the stock. And obviously, demand for oil is the ultimate deciding factor in free cash flow growth. But I think under the new administration, this is likely to grow and regulations likely to be lowered for the next 4 years. So I think Energy Transfer is actually an excellent stock in my non financial advice opinion, because this is an opinion, it's not financial advice. But in my opinion, this is still a really good stock to buy and hold. I really have loved this stock. It's my biggest gainer. I've talked about it a lot. But just in case you guys were wondering, this is my DCF model valuation of Energy Transfer. And I think the stock still has a long ways to grow, and I'm excited for the future. If you guys want to check out my video where I break down the actual business model of Energy Transfer, then please check it out here. And if you guys enjoyed the video, please leave a like, please subscribe. I really appreciate it. Thanks for watching. Bye.